Good morning. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is October 27, 2012. Lots to talk about, so let's get started. All right, so it is 5 o'clock in the morning, so please forgive me if I seem a little bit groggy. I know I say that in every single video, but I just want to make it clear to everybody and all the new comers that watch my video that, sometimes I do that simply because I want to get these videos out as soon as I possibly can. Now, the good news is I did get my video cards in yesterday, plugged it into my computer. I got a BOSD, blue screen of death, BSOD. And I was forced to boot into safe mode, like everybody knows, and load the new. Had to load the new video card drivers, and now in the end, I'm up and running, ready to go, ready to make some money. Thank you very much for bearing with me on using my MacBook Air to make these videos. But in any case, let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. If you didn't already know that, now I'm going to zoom in here, and I'm not going to talk about I'm going to do a recap like I normally do, but because this is a weekly video, I'm just going to do a weekly recap, meaning I'm going to left off where I started instead of going all the way back in history, because the fact remains, I have previous videos, and if you're curious to see if I'm lying or not as far as my prediction goes, feel free to look at the previous videos. Everybody knows that watches my videos that I try to be as truthful as possible. I don't charge for my videos, so I don't need to sound like I know what I'm talking about, or that I'm accurate, or if I'm not accurate. The bottom line is, if you guys are making money off these videos, that's great. If all I ask is, if you could possibly help somebody out there that's in need of help, or does not have, or is not as fortunate as you are, give $1 here, give $1 there, help an old lady across the street hold the door open for somebody, with a child, or doesn't even need to be somebody with a child. Anyways, I'm 2 minutes into this video. I better get started because I like to ramble. Let's get started. Okay, so we have all these lines over here. I'm just going to delete these lines. Well, all right, let me just delete the lines that I need to, and then I'll get right back. Alright, in the previous video we did talk about this upper trend line over here being a very powerful trend line, because we went right into it and then we pulled back from it, okay? Also in the previous video, I also mentioned how I get predictive levels from a rising triangle or ascending triangle pattern, okay? The way I do it is simply go right in the middle of the triangle, get the closest pivot to the middle, and then put that at the breakout or the breakdown, or the start of the breakdown. And then from here, I just draw a line straight across, and then there we have it. I mean, that's pretty darn close if you ask me. And again, nobody I've seen or any book that I've read, the possibility is, there is a possibility, but right now I have not seen anybody do it this way. In any case, we've pretty much gotten or met this minimum requirement here, or when I say minimum requirement, what I do mean is chances or potential of price getting into this line here is pretty good. So the low of this candle here was 140.39. I did mention that there's a potential that we might get down to the 140. That is still a potential, except for what happened on Friday, okay? However, I'm still doing a recap. So from this day was when I left off, right? And I did say, okay, if we get this pivot point here, which is not really a pivot point, but if we got this pivot point and this pivot point here, and we just drew a straight line, right? All you need is 2 pivot points. In this case, it would have been 3, and we just draw a line straight across. What do you have? You have a support level, okay? So let me just delete this line here because it's not needed anymore. All right, I'm gonna leave this line here still. Anyways, we come up into this upper trend line, we get a pullback, we come down, and intraday we get a bounce. Now, why would you think that maybe I would not have taken a long trade because it hit this bottom trend line? Well, this bottom trend line held simply because, well, it is a trend line, and it was an intraday trend line. And the reason why you would not have taken this long trade, and if you guys been watching these videos as long as I've been making them, you guys would know that I would not have taken this as a long trade. Why? Because this candle here was a long candle. This candle here started the down, or the downside, or downtrend, if you will, and it happened on high volume, right? And again, when you have a high volume candle, either on a breakout or breakdown, or a starting of a down or uptrend, that's pretty much the beginning. And then what you normally do is you taper off, and then when you have another spike in volume, that's when you normally that's when the trend will normally change, especially when you have a candle that's somewhat of a hammer candle here and right into support. So you would not have taken a long trade here simply because your volume was not telling you that that would have reversed. In addition to that, I require, in my opinion, at least 3 days previous higher volume. So if this volume was maybe up here, then I may have potentially taken a look at that for a long trade. However, in addition to that, we would have resistance right here with these two moving averages, as well as this 144.30 level. So even if we did go higher, we wouldn't have gotten much higher before coming back down. Again, the trend has already changed on the daily chart. You have a high, a lower high, and another lower high. You have a low, a lower low, and, excuse me, and another lower low. And because we wouldn't have seen anything past this day here, there's a potential of another lower low, and this day it actually happened. So it would have been a counter trend trade, and that's not what you want to do. Okay, so the next day we actually break down again, and here's the cool part: we break down right underneath this 141.95 level. And again, these levels are intraday, daily, or in a gap situation, right? I mean, we've talked about this multiple times, and no, I still have not determined how to mathematically calculate which one it's going to be. I'm still working on it though. Don't worry about that. But this formula alone was not an easy formula to come up with. So finding out if it's going to be an intraday, a daily, or a gap is going to be even harder. But rest assured, I am still working on it. Anyways, we come down and we bounce into it, all right? And then we bounce into it, we pull back, we bounce into it, and then we pull back, and then we bounce into it again, and then we pull back. All right, so we're switching into the 10-minute chart here on the SPY, and then you can see this gap down here. You can see, right, let me just zoom in into this data over here. You can see right at this 141.95 level, this is where the gap started, okay? And then we come up, we pull back again, we come up into it, we pull back again, we come up into it again, we pull back again, so on and so forth. So this 141.95 level is a pretty significant level, at least in the intraday and of course in the daily. So after this day happened on higher volume, and this volume was pretty much almost as high. Let's see, this volume was at 192 million, and that's pretty good volume, and this was 185 million. Therefore, this volume was actually substantially higher than most volumes out there right now, right? So why wouldn't I have taken a long trade here? Well, for the same reasons as I didn't take the trade over here. Yes, the volume was higher. Yes, this could kind of, some could argue that this was a hammer candle, but again, it was a gap down right underneath this 141.95. Therefore, the resistance would be really close. So even if it did have some upside, it wouldn't be that much. Not only is it into this 141.95 calculated level, but we are now we gapped under this bottom trend line over here. So let me just delete this line over here, and then delete this line over here. See, so you see how that worked? We actually broke down. We didn't confirm though. Okay, so just keep that in mind. We broke down from this bottom trend line. I was expecting another close below here to actually confirm the breakdown of this trend line, but because we didn't do that, there is a potential that we could go higher. However, because that potential wasn't going to be very much, I mean, what do I mean by if we did get a bounce, I mean, the most we would go is to this 141.30. Again, it would be a counter trend trade. And yeah, you could take that trade. I mean, nobody's stopping you. It's just that I wouldn't have, simply because the upside isn't enough for me to validate an actual trade, right? A counter trend trade is a little bit more risky. What I would want to do is wait for it to go back into this 144.30 and then take another short trade, because in again, you want to trade with the trend, not against it, right? The trend is your friend. You don't want to swim against the current. You want to swim with the current, right? So essentially what's happening now is, as you can see, as it's coming down, we're just bearishly consolidating under this bottom trend line and this 141.95 level for another potential to come back down to potentially potentially, okay, potentially the 137.51. Now the way I see it is simply this: if we come down and we continue to consolidate under these two lines here, then yes, I definitely think that this 139.21, we could get at least an intraday bounce and then come back down into this 137.51 level. That is definitely a potential move. All right, now I'm going to show you the contradicting signal that we got on Friday, which was here. This is a doji candle, right? After a down move, you create a doji candle. This candle represents indecision, and in Japanese it means meet in one place, right? And indecision on higher volume, at least from the past 3 days. This was only 2 days, so it doesn't fall within my rules, which means I would not take a long trade, but there's a potential that this could actually go higher Monday. Why do I say that? Well, Monday is a low volume day. It gives the institutions a chance to prop the markets higher. They have the money to do it. Therefore, it's not, it wouldn't be unheard of to see it happen. Now, here's the thing. If we don't close above this upper trend line here, then I'm pretty sure that if we can still continue to move sidewards here, okay, that we do have the potential of getting to this 137.51 level. Okay, now keep in mind that the elections are coming up in a couple of weeks, so it would have to happen before the elections, before November 6th, basically, because what I'm thinking is they're probably saving all their money, and then it's going to hit the markets all one time to prop the markets higher right before elections, so who can get reelected one more time, right? All right, so that's a contradicting move. First, this is a bearish, possibly a bearish consolidation pattern that could come down all the way into this 137.51, not negating this 139.21. This 139.21 still is a valid level. We could actually, consolidate from there, or potentially have a intraday bounce before coming down into this 137.51. Now, again, these levels are not levels telling you that it's going to get there. It's just telling you if it does get there, then the odds are in your favor that it should bounce. And that's again, this is just my opinion, right? But as you've been watching in previous videos, it's a pretty good opinion, because it's been working out pretty well ever since December of 2011, when I actually discovered the formula. And this formula would be almost 1 year old. Okay, so now we have these two moving averages coming together, kind of bending inwards. So this is still telling me that there is a more potential of being bearish than it is bullish. Okay, so the first couple of days of next week, there's a potential that we see a bounce. Now, one thing that I want to keep an eye on is I don't want to see a close above this candle here. If I see a close above this candle here, there's a potential that we may retag or go up and retag this upper trend line over here. Okay, so just keep that in mind, that if you want to be safe, rather safe than sorry, then I would wait for a short trade and not a long trade, which means I would wait for this. Okay, so if I was to take this pattern, I'm still debating, but let's just say I start selling whatever. Let's just say I start shorting the SPY, or I buy the SDS long, right, which is short the SPY. Basically, if this is a bearish pattern, then I'll be in good shape, because eventually, as we go higher, we will break down lower, and I will not miss the trade. Say I take the trade on Monday, right? Now let's just say we get a close above this candle here. Around this candle here would be, say around 143 from 141. That's only $1, right? So this would be like 142, and this would be like 143.88. So maybe $2. That's only a $2 stop. That's not very much. You could actually get really conservative and say, okay, if we get any close above this 141.95 level and inside this bottom trend line over here, which is now resistance, then I'll stop out. Okay, you could do that as well too. I mean, the options are endless. Well, not really endless, but this is something that I'm considering. If I take a short trade now and I close anywhere above this 141.95, I stop out and I wait. I wait for it to get into these possibly this two moving averages, or I would actually wait to be conservative, to be safe, wait for it to get into this 144.30 level. And it really depends on how close we are to the elections, and that'll really the elections, I really have a feeling that the markets will be manipulated at that time, or close to that time. And it wouldn't be, out of the question. It wouldn't be a surprise to me if that happens. Okay, now here's something else I'm going to show you that's going to be pretty interesting. Now I'm going to load my drawings in here. Bam, just like that. Okay, Now remember, we got this line over here. We just talked about this predicted level of this ascending triangle over here, right? I'm going to get rid of this. We already pretty much met that. All right, and then we have this bottom trend line here that we broke down from, right? And then this, now we're trading under it. We just talked about that about 2 seconds ago. Okay, so I'm going to get rid of this line here, and I'm going to get rid of this ascending triangle here. What do we have? We have now this rising wedge pattern. Okay, now we have that rising wedge pattern, and we recently bounced off of this rising wedge pattern, and we went right into it again. But then this bottom trend line here didn't hold very well. But now let's just look at this in a pattern perspective. This line here, which you've never seen yet, actually let me just delete this bottom line over here. That one's not needed. All right, so this line's here, I grabbed from the middle, right? Just like the ascending triangle, the middle of an ascending wedge. Put that at the breakdown level, which is right here, and it ends up being right at this 137.51 mathematically calculated level. That was pretty trippy. I really like patterns and how symmetrical charting is. Now, if you recall in my previous videos, I did mention that these rising wedge patterns versus a rising triangle pattern isn't as reliable as the rising triangle, meaning a breakdown of a rising wedge pattern isn't as, in my opinion, as strong as of a indicator as a rising triangle, okay, or an ascending triangle. But the fact remains that there is a possibility that we can get into this 137.51 level. Not saying it's going to happen, it's just saying that right now, as we build this bearish pattern, it looks more and more likely that we're going to get there. And I've been talking to you guys about this 139.21 level since October 10th. All right. Now switching to the weekly chart, I still have these two upper trend lines here that takes us all the way up to this 157 level. Okay, so that's still a potential of that happening. I just don't see it happening anytime soon. I mean, I highly doubt that's going to get there before elections. I mean, that's going to be, well, I should never highly doubt anything, but that's going to be a pretty big one if that actually happens. So I'm not even going to pay attention to that right now. Right now, what I'm paying attention to is, let me just get rid of this line here. This is a somewhat of a, you know, a pattern right now that has higher highs and higher lows. This is the weekly chart, right? Which means that we are in the weekly still in a longer term uptrend. Okay, and if you see that this could potentially just be a pullback, right? Now what you could do potentially on the weekly is just grab the bottom pivot over here, which is a pretty good pivot, and then you bring it up to this pivot here, and then you just draw a line straight across just like that. Right here for next week lands right in the 139.21. So again, there's a potential of that happening. Now keep in mind that we could get a bounce next week, and the reason why I'm mentioning also that Monday and Tuesday or in the beginning of next week there's a potential of we getting a bounce is because on the weekly we're right on the 20 moving average. So it wouldn't be unheard of to see somewhat of a small bounce on the 20 moving average, because you know that it happens, right? And everybody knows that the weekly is going to, you know, trump the daily, and the daily is going to trump the hourly, and so on and so forth. Okay. All right. Last but not least, let's check out the Fibonacci retracement on the weekly, and check this out. Let me just delete all my drawings here. All right. Remember this 137.51 level now. That's the one we just previously talked about of a potential of it getting there. We'll grab the bottom of this bottom pivot here. We'll go straight up to this top pivot here, and we have 137.94 right there. See that? So let me just load my drawings one more time, and then I'm going to do the same thing from this bottom pivot all the way up here, and look, it lands, whoops, let me just get my tool here, it lands right there, right on the 137.51 level. Again, you get this trend line, we're right into this 139.21 level, right? And then we have the Fibonacci retracement at this 137.51 level. So there's a lot of bearish sentiment out there right now. Just keep in mind, you know, if you are short, you know, put your break-even stops in there, put your stops in there or whatever, because they could just whip this market right back up right before elections. We've seen it before. And one thing to note, I wanted to show you guys this. Switching back to the 10-minute chart, you notice towards the end of the day, let me just delete all the drawings here. Okay, you see how we sell off towards the end of the day. We sell off towards the end of the day. We kind of sort of just consolidate towards the end of the day, and Friday we sell off towards the end of the day. Where is that? How does that look different from previous days? Well, we've been seeing a lot of market manipulation where towards the end of the day we get a buy, we get a buy, people start buying, and I mean, we see this, and we've been seeing this for a long time. I mean, we've been talking about market manipulation for a very long time. I mean, with all this volume and all this, buying in and stuff like that, but we haven't seen it this past week. Okay. So that leads me to believe that again, it could possibly be that they're saving their money. They're saving their billions of dollars to whack the market all one time. They're just gonna buy in right before the election, so it props the market higher. I mean, it's not unheard of, right? I could be wrong. I'm speculating, but right now the charts are telling me. What are the charts telling me right now? Let's see. I've already given you what I see in the charts. Now I'm going to tell you what the charts are telling me. The charts are telling me that this is bearish consolidation. I cannot say that we are going to reverse simply because this candle here, even though it's a doji and it's higher volume, it's not higher volume from the past 3 days. And it wasn't off of a pivot, meaning we didn't come straight down and then create the doji. We actually came straight down, we consolidated, and then there's a doji. So there's a chance that we may pop up a little higher before coming down lower. That is what the charts are telling me. But that's not what I think. Again, there's trade what you see and not what you think. So again, if you are short, just put your stops in place, put your break evens inside, in place, and just be careful because they could whip this thing up at any time. Okay. All right, I'm running out of time here, so this is the US dollar futures. We're still trading in between this $80.61 level and the 78.74 level. And again, there's a potential we get up into this 81.26 level. However, if we get into this 81.26 level, boop, just like that, somehow, we'll say we consolidate or something like that, and we get into this 81.26 level. I think that'll be it for the dollar, and then we'll have this nice pullback here, which in turn will, spike the markets higher. Of course, everybody knows the dollar is inverse to the market, so if the dollar goes up, markets go down, and vice versa. Okay, so right now we are into pretty good resistance. Whoops, didn't mean to do that. Let me just grab this trend line over here, and let me show you that this trend line here is still holding up pretty well. We went right into the 50 moving average. We got a small pullback. We went right into this upper trend line, and again we're having this small pullback again. So sure enough, or shortly, we're going to get into this 200 moving average as well as this $80.61 level. However, if we can break out of this upper trend line here and get up into this 81.26 level, that'd be great. What do I see now? I see a high pivot, a higher high pivot, and a higher high pivot, which means on the daily chart the dollar is the trend has changed to bullish. We have a low, we have a higher low, we have a lower low here, so it's kind of getting sloppy and choppy, but eventually we'll get into this $80.61 level, and then maybe have a pullback, or into this 81.26 level and then have a nice pullback. I don't see it getting any higher than this 81.26 level, so keep that in mind. If we get in here as of now, the pattern might change, but as of now, I don't see it getting past this 81.26 level. Alright, this is the chart of the Qs. I talked about the Qs in the previous video. I said this level here at 64.58 is where I'd be interested taking a long trade. You know what? I'm very disappointed in my trading software here. They did an update and they messed up with my alerts, and therefore I had an alert here, but I missed it. I was unfortunately sleeping because of the time difference between here and New York. And I missed this trade, and I was very well, I wasn't very upset, just very disappointed as to why I didn't get that alert. I did not have a trigger set. Maybe I should have had a trigger set instead. In any case, let me just load my drawings here. It went right into the 64.58 level. Now, what is the low of this candle? The low of this candle is 64.65, right? So I missed it by, I think, 7 cents. Not too bad. I mean, it's, again, these levels are not perfect, but my alert was set right around here, so I would have caught it right at the bottom, right at the low. Okay, so this 200 moving average saved it. Now there is a potential that this may have been a blessing in disguise, because if this is actually the start of a consolidation pattern, then I'd rather wait for that and then take another short trade, and then potentially come up with another mathematically calculated level for the next stop before we get a bounce. Now this is a calculated level here. This line here came from the top of a potential head and shoulders pattern that I talked about in the previous video. We moved this to the breakdown. We had this retest of these two moving averages, and the bottom trend trend line, which used to be support, is now resistance. I said you could have taken the trade here to the short side and then just had a stop right above this bottom trend line here. Sure enough, we pulled back and went right into the 64.58 level, and we got an intraday bounce right there. Okay, so these levels are holding up pretty well, especially for the Qs. The Qs before that, the 66.38 level, went right into here. Again, it wasn't perfect. It got pretty close though, and then before getting a bounce, and then again, these levels only hold up for one trade or one bounce before I can't trust it anymore. So after this level was hit, I can't trust it anymore. Sure enough, it broke down, and I'll hit this 64.58 level. If we get a small bounce, then I will not trust it anymore, and we could potentially break down from there. Okay, so let's take a look at Apple. Alright, this is a chart of Apple. Now here's the interesting part of Apple. Apple did not actually tag the 200 moving average, right? But what did it do? It tagged the 591.51 level. This one is pretty cool because Apple, being such a big stock, you know, it's a $600 stock. These mathematically calculated levels had a bit of a difficult time being perfect. It was normally like $1 or $2 off, which I considered okay for a $600 stock, because the percentage ratio would be the same for a stock that's like 20 bucks and 1 cent off, right? So the low of this candle was actually 591 even. Okay, you can look up here if you guys are new to these videos. The L means the low, so I put my mouse over here. The low is 591 even, so I missed it by 51 cents before Apple got a bounce. Again, another trade that I missed. Intraday, this would have been a beautiful trade, because at the end of the day, we closed at $600.04. That is a $13 profit intraday, which is a pretty darn good trade. Would I take this trade to the long side? No, absolutely not. Yes, um, there is a potential that Apple will have some upside on next week, and Apple will push the markets higher, which is also another reason why there's a potential that the markets could spike tomorrow. Sorry, on Monday. We have high volume here. This is really nice high volume. We are into the 200 moving average. We are into this 591.51 level, and we have somewhat of a hammer candles. There's that little tail on the top, but you know, to be honest, this is a somewhat of a reversal candle. There is a potential that we bounce, but just keep in mind that the 20 moving average is lurking above there. Okay, and we also have this upper trend line here. So the way I see it, to be honest, if we can bounce into, okay, into this upper trend line over here, that's when I take a short trade on Apple. Right, Apple is a strong stock. I don't know if you want to take a short trade, but the fact remains that we have switched from an uptrend to a downtrend. What I would potentially do, because this is such a big stock and it may not happen for a while, what I mean by may not happen for a while, we may not tag this upper trend line for a while, maybe possibly maybe on around this area here. I'd wait till we hit the 672.90 level. I don't think it'll take that long, to be honest, but there's a potential that we will before taking a short trade. But then that would have changed the trend, because this would be a higher high, right? But essentially, no matter what, if we get into this upper trend line here, any close above, I would stop, but then I would take a short trade before potentially getting into this 511.38 level over there. So just keep that in mind for Apple. Alright, in the previous video I also talked about Vmware. Vmware went right into this $86.33 level. We got a bounce, okay? So that's pretty cool. We can't trust that level once it's used. It breaks down, sure enough, it breaks down. We get an intraday bounce on this 82.55 level. Let me just zoom in here. This 82.55, the low of this candle was 82.59. Again, that was 4 cents off. We get an intraday bounce. It's a nice, beautiful intraday bounce, but if you had taken this as a swing trade, still would have made money, because intraday we gapped down, but then we ended up closing higher the very next day, and then we continued higher. Okay, so the low of this candle was 81.55. If you had taken the trade at 82.55, the high of this candle was 88.57. Huge jump, lots of money to be made on VMware. The reason why I didn't take VMware was the same reason why I said in the previous video, was that this was earnings, and I do not trade earnings simply because it's a gamble. You want to gamble, go to Vegas. You want the odds in your favor, you want to be the house, then you use technical analysis, and you don't trade earnings. This is the chart of Amazon. I can't remember if I talked about Amazon in the previous video, but let's just give a quick recap at this 239.02 level. All right, we get a nice bounce. Again, it's not perfect. We pierced it. Actually, the low here was 238.51. Not too bad. We go into the 20 moving average and we break down. Okay, we almost get into this 220.53 level that I would have taken a long trade on if we did. Again, these levels are, if it gets there, we'll get a bounce, but in this case we didn't get there. This alert here did not get triggered. I should take that off. And then we go right back into this 239.02 level. Once again, the high of this candle is 238.71. Would I take a long trade on this? No, the move has already happened. I would only take the long trade if it had gotten into this 220.53 level. Now, Amazon just had previous earnings, so I wouldn't have taken it anyway. I would wait a couple more days. Maybe if Amazon can get into the 50 moving average, then I might consider taking a short trade, depending on if I can come up with more mathematically calculated levels in the short term. Alright, this is a chart of SINA. I talked about SINA in the previous video. I think I did. This is a 52.92 level here. I'm going to take this alert off and say that this 52.92 level is invalid as of now, simply because we did not go straight into it. If we had gotten straight into it, then I would have taken this for a long trade. However, we got this small bounce, and we have these moving averages curving in. We could get a breakdown. This 52.92 may not hold for a multi-day trade. What I would do is I would wait for the price to get down into around this level here, which is $50.22. And what I'll do is see if there's another mathematically calculated level that ends up in that area, and this would also be a gap fill. The reason why I want to wait is because again, I want to go straight into it, not consolidate first before it. Okay. So that pretty much covers it. I'm already into 31 minutes. Thank you very much for stopping by and watching this weekly video and this weekly stock analysis video every single week. Taking half an hour out of your life just to watch or hear me yap about the stock market and technical analysis. I really do appreciate you guys stopping by. God bless you. I hope you hope to see you in the next video, and please subscribe, because when you subscribe you'll get updates every time I release a video, because every once in a while when there's a serious move or a big change, I'm gonna take time out of my day just to make a video, just to warn you guys what I see if there's something big. But normally, after so far as of late, every single weekly video has turned out to do exactly what I've been talking about. And every time I talk about volume and all that kind of stuff, you guys are pretty much know what I'm thinking already during the week. So the weekly videos are just going to be more of a recap of what happened and what I think is going to happen next week. Do I see more downside? Yes. When this 137.51 level is definitely in the cards. Will it happen? It really depends on how fast it gets there, and again, there's the election, so there will be market manipulation. Okay, so in any case, thank you very much. God bless to you all, and I hope to see you in the next video.